Hi Ripsters, welcome to the end of Q2 2021 financial update. This quarter, I will only be doing a video financial update. I hope you like it, I hope you enjoy it. So let's get started. So before we dig into details, let's go to the recap session. This quarter, as you know, I measure our net worth growth in three currencies, even though I don't care much about US dollars. But I do care about euros and Swiss francs. Why? Because we don't know yet if you're going to live in Europe or in Switzerland, even though Switzerland is in Europe, but I mean in euro currencies or in Swiss franc currency. So this quarter, thanks to an amazing June, ended up in the positive, in the green side of the color spectrum, both in euros and in Swiss franc. In euros, after 2 months where we were like negative 1,000, we jumped plus 35,000 in June, so it means more or less 34,000 euros richer than the end of Q1, which in percentage is roughly 2 point something percent of our total wealth. If measured in Swiss franc, the situation is a bit less rosy because the first 2 months has been pretty dark of the quarter. So we are in the plus 24,000 Swiss francs range. In US dollar, everything has been much better because the dollar lost a bit in this quarter, but not in June. What saved our quarter was an amazing June driven by a strong dollar. I'm still much more exposed to plain US dollar than stocks. So whatever the dollar does, it drives my returns, which is not good, and I'm getting into a better. I'm taking actions against that. Okay, Mr. Market. Mr. Market had an amazing quarter, even though most of the returns happened to be in the first 2 months, April and May. June was not a great month for the markets, but it was a great month for the dollar. So my returns are a bit skewed. They are too much dependent on the dollar movements. I'm taking actions against that. I'm moving my allocation toward a more dollar independent configuration. Plus, let's not forget that the small crypto investment I've done starting in April is not performing as expected, or better, it is performing as expected, and it is performing shittily. Anyway, let's take a look at my investments. According to the plans, I'm moving more money from cash and bonds into stocks while the market is rising. So I hoped for a market crash, but it's not happening. So I'm buying into ETFs, much more in VT. Yeah, at 103. I sold all my shares at 80, at 79 actually. Now I'm buying 8 VT shares at 101, 102. That hurts my ego, but it's better to get back in track than stay at the window and wait for something that might never happen. So I bought quite a lot of VT shares, like 300. It's $30,000. I bought a lot of VMI, which is international, so non-US, high dividend yield. I bought some VTV, which is US value, and I bought some VSS, which is international, so non-US, small cap. That's okay. If we look at the target asset allocation, I'm still behind. I should sell more bonds, but I'm doing that. If we take a look at net worth by asset class, we can see that the percentage here of bond and stocks, they are going they are like stocks are climbing and bonds are declining, which means I'm doing the actions I'm supposed to do. The target asset allocation, I check the CAPI, the cyclically adjusted market price to earning ratio, on top of which I base my stocks bond split. I explained a few times what's my strategy. So my strategy is to have a percentage of stocks and bonds that depend on current valuation. So the higher the valuation, so the higher the CAPI, the lower the stock percentage is in my portfolio. Currently it's 26.1. So it's stable. Here I change this, which means according to my formula that I should own roughly 60% stocks, 40% bonds. If the market goes like, if valuations grow even more, my asymptotical allocation would be 50-50. If the market crashes and the valuations go down, my asymptotical allocation would be 100-0. But in order to move into this territory, the CAPI should be below 10, which is probably something will never happen again. So maybe I should move back. I should change this formula. But anyway, it's not that bad. It forces me to stay at least 50% invested in stocks. And again, I'm a bit, how can I say? I am risk averse, so that's okay. That's okay. Okay, back to, I've done my job here, investing more into stocks. I've done my job selling bonds. I sold my $500 or $40,000 of bonds. I aim to reach by the end of December 2021 the target allocation, which is here. And target allocation says that I should sell another 135,000 Swiss francs, so under 50,000 US dollars of bonds, and move them into stocks probably, or even fund. Even though better not play too much with fund money. Yeah, that's it. My FinPension account is growing, which is my third pillar, which is fully invested. It's a 99% stock invested. I also got 200 Swiss franc of referrals. If you are living in Switzerland and investing into a third pillar, I strongly recommend FinPension. It's really doing great. It's tracking the indexes and low costs. It's the best way to invest your money in your tax advantage accounts. I have 2 accounts for me with FinPension and 1 account for my wife. And we are all doing extremely great. And our total is roughly 120,000 Swiss francs invested. Great. Plus my wife Viac account, which is invested 80% in stocks. It's a second pillar. When she worked, she had a second pillar. It's still like just for Swiss people or for people living and working in Switzerland. Actually, the vested benefit account is for people not working anymore or like having money saved somewhere between jobs. And that's also doing good, even though it's like 4,000 Swiss francs. Then on the bond side, I consider my second pillar bond, which is at the moment roughly 305,000 Swiss francs, and that's the European bond part. On the US bond part, I still have like a lot of BSV, a lot of short-term US bonds. This is going to decline as I explained previously. And there is like the Buoni Postali, the Italian bonds, which are like doing great. Those are old 2004 bonds that are yielding like 6.5% gross per year, and that's great. I will hold them until expiration date, of course. And that's it for bond. If we take a look at the relative weight, we can see that the stocks exposure is growing, both due to my investing more into stocks and probably part of it due to stocks growing themselves. The bond component is finally reducing a bit too slowly. I can see here that in the last 2 months I committed to sell like 50,000 euros of bonds per month, and I just sold 60,000 in 2 months, but I did a great sale on April, so that's okay. Crypto. Okay, here on the column P, which holds the latest like the end of the year situation, you can see different numbers from the latest column. That's because I already filled July, and so here you see July numbers. Anyway, who cares? On the other investments, cryptos are doing pretty bad, as we all know. I've invested 10,000 euros, and then 7,500 Swiss francs, so 16,500 euros, and my current Polkadot holding, all at stake, is roughly 11,400. Actually, in July they're still losing. I still think it's a great project, and in this year, few parachains are going to be launched, and I think it's a great. It's a reasonable project. It's the project in the crypto world that excites me like a bit, and I want to support it. Maybe I'm supporting it too much. I've also added another 1,250 euros on Kraken, ready to be deployed. So I have a strategy. So I'm ready to deploy more money. In the end, I want to invest no more than 20,000 euros in cryptos, initial money. So I'm left with another 1,500 more or less to invest. That's it for cryptos. In the private equity, as I said in a previous update, in a previous monthly update, I invested some money in Rome Research. They launched an opportunity for those who have subscribed as a believer, so in the believer plan, and I actually threw 10,000 at it, but they collected too much money, so they decided to only allow for 1,500 per person. So I've invested 1,500. The sad thing is that the remainder of this 10,000, so 8,570, because I got a cut on the fee since I only invested 1,500. They cut my investing fee to just 30,000 instead of $100. So the remainder, which is like 10,000 minus 1,500 plus the rest of the fee, is still somewhere in a Boston private bank. I asked for a full refund, and their representative, they are telling me, yes, there is a manual queue, so the engineers are still doing refunds by hand, which means they are planning to make a better pipeline or whatever. So I don't know. I hope it's not a scam, and it's not a Rome Research. It's a WeFunder. WeFunder is a startup that allows you to invest in startup. So it's a crowdfunding company. It's like a Kickstarter for companies. That's an amazing idea, actually, and they are getting funded. So they are not a scam, I assume. until I see those 8,570 US dollars back, I cannot tell that it's not a scam. By the way, to send them $10,000, it took a few days, and Post Finance charged me 22.22 and another 2.22 US dollar for these wire transfers. And holy fuck, they're crazy. That's not. I still can't. I still get angry when I see this. They charged me 24.44 US dollar for that wire transfer, and now probably when the money are coming back, I get another fee. So first recommendation: think twice before investing in private companies in US from Switzerland, because to just invest in the end 1,500 US dollars, all the hassles, like it was not worth. If I could go back, I would not invest, even if this money will 10x. It's not a life-changing. It's like nothing. I should not have invested money with Rome Research, not because I don't believe the company, even though 200 million pre-money valuation, it's really a dot-com-ish bubble valuation. But because to invest 1,500, I had to move money among accounts. I had to pay a $10 interactive broker fee because I moved money twice in the same month. Stupid me. That was my mistake. I had to pay $24 to Post Finance, and then now I'm waiting and sending email to wait back for 8,500. All of this just because I rage invested $1,500 with Rome Research. Not worth. It's either 10,000 or more or nothing. What is 1,500? Anyway, okay. Yeah, on the cash side, that's not interesting actually. I have money like everywhere. Like the current cash scenario is pretty sparse. I have several accounts, each one in every currency, and that's a mess. For example, PayPal, Stripe, Revolut, Kraken, they are all in interactive brokers. Post Finance, and Swiss franc, euros, and US dollar. It's a mess. I'm switching to use Stripe more than PayPal for my services and other way to get money. They are slightly better, slightly. Still charge you fee, but yeah, I mean they need to. Nobody works for free. Like my taxman said in a recent email. I used to ask to a guy to file my taxes until 2-3 years ago. He was charging a lot of money, and I recently received the final bill for 2017 that was still under his management. Just for forwarding an email, he asked me 50 Swiss francs. So I told him, hey, you're crazy. I mean, I'm paying because I know the hassles of not paying this fee, but just don't forward me any more email. Go fuck yourself forever. Sadly, this guy was like strongly recommended in Google until 3-4 years ago, like within Googlers in Zurich. But then he raises his fees and is really like charging 50 francs for every email. Go fuck yourself, CDC. Okay, so cash. Interesting. I don't know if there is something worth saying about cash. Well, we've been in Italy for a trip. We've been 2 weeks in Apulia, so we had to use some actual cash because south of Italy. Yeah, what are those credit cards that are tracked? We like cash, so we can. So taxes. I mean, we can just. Taxes. Who pay taxes? So we had to use actual cash. So as you can see here, actual cash dropped. Well, it didn't drop because we withdrew some money, and I activated the efficient machine of sending Swiss francs to interactive brokers, buying euros, sending euros back to a euro account, a euro denominated account at Post Finance. and then withdrawing money in Switzerland, so actual cash in Switzerland at PostFinance. Sadly, we weren't able to withdraw the second part, so we had to do one withdrawal in Italy and pay some fee. PostFinance was asking €5 flat fee for withdrawing euros from a euro-denominated account in an Italian ATM, but like I discovered that Revolut charges much less, 1 point something. We paid €1.60. So I withdrew money from my Revolut account. The Revolut credit card has been pretty useful. We've been using it whenever possible. So whenever cash was accepted and in Italy, whenever, a credit card was accepted in Italy. So we're pretty happy with it. But there's something weird with Revolut. I shared a tweet. They keep raising the referral fees. So they're sending me emails every other day with hey, recommend people, we'll give you €45 for each people you recommend. Then the offer expires, and then hey, recommend people, we give you 55, then 65, then 85. The last email was hey, for every friend you bring into Revolut, it's 85 euros. So I don't like this. I'm a blogger, YouTuber, influencer, so I should supposed to be happy with a larger referral fee, but I'm not, because it's an indicator of the something not very clean on their side. Okay, I have a lot of cash in Interactive Brokers, dollars, euros, and Swiss francs. The euros and Swiss franc has been because I decided to clean all the currency pair. Okay, now on Interactive Brokers you can easily convert currency using a convert function, which translates it in a market order. Up to a few years ago, you had to buy money on the market with limit. You had to buy currency pairs. So in my portfolio view, I still had a lot of currency pair, sometimes even the opposite. So I have CHF EUR and EUR CHF, and their visual was bothering me, and they also their return was bothering me and disturbed the view. Yes, you can hide that. And I wanted to clean them, so I did a few movement. I did like 10 currency conversions, avoidable, just to clean this. Apparently, I collected 20,000 of realized losses, because I essentially my currency conversions on Interactive Brokers have been Swiss franc to US dollars, and in the last 6 years the dollar lost compared to Swiss franc, so I had a lot of unrealized losses that I cleaned. I realized, which means if this year they're going to consider me an active investor, they're gonna give me money back, because I have more losses than gains for this trick. Anyway, that was not meant for this. Yes, cash. Taxes has been fun. Taxes has been I received a lot of letters from the Steueramt, cantonal, Bundes, whatever. They're finally cleaning previous years. The federal taxes. I still wait for cantonal and municipal taxes. So what happened? I received final calculation for 2017 Bundessteuer, so the federal taxes, and they were lower than expected. Yoo-hoo! Which means I kind of had a jump of 3,600 something Swiss francs that I consider as income. Here I put into the others here in income. 3,681. Why is this considered income? Because, well, it should be extra income in the year 2017. So that should impact 2017 saving rate and other metrics, because I consider my metrics after tax, and I paid, or I thought I had to pay more taxes, but the actual taxes were low. So in 2017 I should have accounted for a larger after-tax income. I'm not going back and changing that, so I'm accounting as a 2021 income after tax. Yoo-hoo! So why I got a lower federal tax bill? Well, I shouldn't say that on camera. No, essentially, in Switzerland, accumulating ETFs are usually taxed as distributed, just under the hypothesis of some virtual dividends. When I declare my taxes, many of the accumulating ETFs I owned in 2017, they didn't show yet their virtual dividends. So my tax accountant said, well, we cannot just guesstimate, so we will put 0 dividend, and then the tax office will do their job. Apparently, I mean, we had no other way of acting. What should I have done? But the tax office didn't bother. That's something that you cannot do these days, because on the IC tax 2021, whatever, income and capital taxes. Here you can find the virtual dividend here. Okay, now they are much faster at adding the virtual dividend. Let's, for example, check CSS peaks, or well, I should add the ISIN. It's a bit more it's harder to find here. Search S&P 500 iShares, blah blah blah. Well, so it's US. Well, now you can see that the dividends are here. There's no way you can avoid that. But anyway, 2017 was still they were not that prepared, so I got this jackpot. Actually, I got the final bill that says, yay, we need to give you some money back, but I also expect to have to pay roughly this amount of extra city and cantonal taxes. But that was already accounted for. I mean, I accounted for 8,000, but now I can account for just 4,480, which is a big improvement. Taxes 2019, it's a bit more complex. On this, I received many communication, like two communication. On June 9th, I received a provisory 2019 Bundessteuer, so federal taxes, that said, hey, that's in line with what you declared. That's cool. Okay, so I paid my my amount, which was 16,016. That was my expectations. Actually, in January they sent me a temporary of 14,443 that just matched what I was paying the previous year. But then in June 9 they said, hey, okay, we temporarily approve your declaration. So it was 16. I mean, it's complicated. I even have hard time explaining it. So how does it work? Tax year 2019. So in summer 2020, actually should do by the end of March, but I usually delay it until September, like this year. So in August, more or less, I do my tax declaration. In August 2020, I filed tax declaration for year 2019. In January 2021, they didn't even read my tax declaration that happened a few months before, but they said, let's have a temporary, a virtual, an advance. So just give us 14. We expect you to have a similar earning trajectory than last year. So please give us 14,443 CHF as an advance. Then a few months later they said, we temporarily accept your declaration when you said you should give us, your tax amount should be 16,000. So give us 16,016. But then like a week later, I received the final calculation, which was an extra 143 Swiss franc more, because they actually like audited my tax declaration and found 3 deductions that should not have been there, like small deduction. So they raised my taxable salary by roughly 1,000. So instead of 240, I don't remember, but they raised my taxable salary by 1,000. I'm not gonna complain. That's okay. I think they canceled like 3 deductions. One was bike transportation for I don't remember. Anyway, yeah, you can deduct a lot of things here. They didn't accept that. But here in Switzerland, the cool thing is that you're not considered a thief if you make some mistakes. They assume a good intention, so they just say, hey, by the way, no, this is wrong, so we correct it, so give us the difference. While in Italy or in US, for example, if you make a mistake, you pay fines, you receive like threatening. I mean, it's considered like a crime to make mistakes in your favor. They also corrected a mistake in my favor, by the way. I mean, they reduced the taxable wealth because I sold the house during mid-year, so they like prorated my wealth somehow. So they lowered my total wealth by 30,000, which would have like a small impact, smaller than raising my salary by 1,000, which means I also expect a correction of the city and cantonal taxes by roughly 2 times this, so roughly 300 Swiss francs. So I changed this, I paid the difference, and now I'm expecting this amount to be paid as a city and cantonal tax. I hope, hey, tax office, please, before December 2021, city and cantonal tax office, Canton Zurich, City Zurich, please send me the final tax bill for 2017 and 2019, so next year I can cancel those rows. And by the way, what about my DA1 form? Who's gonna give me back the money withdrew by the IRS? When I have some updates, I will update you. Okay, same for like all the withholding tax. I need to double check what's happening. Yes, great. As you can see here, there's been a jump in withholding taxes because in June all of my ETFs distributed dividends, which is awesome. We're gonna visit that section soon. Then what like minor stuff. Good. So total net worth 1 million 372 euros, which is historical maximum. 1,505,000 Swiss francs, which is historical maximum. And in US dollar, of course, it's not the historical maximum because we are below last month. Good. Cash flow. Here. Overall, it's been the best month of the year. 22,700 roughly expected net revenue, which is driven by 307,000 better than expected 2017 tax return, as I explained. But I also of course accounted for the negative 2019 tax return here for the same reason I account for positive and negative tax return. The other minor stuff. If we exclude this 3,500, this would have been like a normal 2021 month. What happened in 2021? Regular salary. Blog income was of course lower because I've been on vacation, but not that lower. Like there has been several services I've done. I've received probably the last Interactive Brokers referral fee because they sent me an email say, hey, every account has a maximum of X number of referral fees available and you've reached them, which kind of sucks. I love IB and I would refer it to everybody. I think I already sent them an email asking, hey, I'm a kind of a blogger. I love referring your platform. Can I have an extension or what else? Threatening or else I will refer another broker, but it's not gonna happen. I love IB. I will keep referring IB even without referral fees. So, but that's sad. Okay. This excludes 200 Swiss franc of FinPension referral fees that I received. Great, because they are issued as fee credits, so it's hard to account for them. But that means that here, when they are getting the money, when they are getting fees from my account, I will have a credits that should last for like several years at the moment. I don't know what happens if I get like 10,000 Swiss franc of fee credits. Well, I will maybe never have to pay that amount of fees. I hope I can transfer to value pension in case I will not have a job and I will need to move the money out of my second pillar. Well, let's see. I will talk with them. They're pretty responsive. Anyway, salary, blog income, 1,573 Swiss francs total. It's a sum of dollars, euros, Swiss francs, mostly from services, mostly from personal finance coaching, mock interviews, referrals, one donation, thank you. And then there is this streaming revenue, which is growing. Well, actually, YouTube revenue is not growing. It actually went down. I've been on vacation. I've been less online. But also Twitch revenues are like showing up. That's nice. And of course, end of last month of each quarter, all distributing ETFs distribute their dividends. And that's what happened. Like every single ETFs I own distribute a dividend. The largest one has been VIMI, the international high yield, that distributed like roughly 1,800. Like it's an Italian salary. Of course, I consider this as income, but we all know that I'm kind of cheating. Dividends should be just part of investments and should be reinvested. I mean, considering dividend as income is like unfair toward growth stocks. But okay, I mean, that's taxable, so I will keep doing this. At this moment, I can say that my 15 expected tax percentage on income is probably not very accurate. what happened last year. Last year in 2020, I assumed a 17%. This year I'm assuming 15%. So far in the first 6 months of the year, my income has been greater than last year. Well, probably no, I was still like, I had Google in the radar last year. But the projections are that if I keep earning like this, I will not pay just 15%. When I fixed at 15%, the expected tax rate on income, I didn't think that was going to work many months this year in a regular job. So this is probably underestimated, which means if I retroactively correct this, all the tax expected income tax will become larger in absolute value, and the income will become lower, the net worth will retroactively become lower. We can do this, we can try, we can see, check, let's check. We can do this, we can do this, and I can check. Yeah, it takes time because it's slow, this spreadsheet, for a reason I'll tell you. I can try to put like 17%, for example. And what happens if I put 17%? Just check this, 1372. This become, where is it? Hey bro. Yeah, why I see it's still updating. Yes, 72. Yeah, 2000 less. Not fun. Let's move back to 15%. I will think about this in a future, in the following month. Okay, but that's all for income. We covered almost everything. It's time to go to the graphs. Let's take a look at the FIRE metrics, even though I don't care much about that. Actually, let's not look at FIRE metrics. I really don't care much about that. Yeah, you can see here that in the Swiss metrics are going down. So I'm getting far from financial independence. That's not because the net worth is growing, but also the amount required to live off our wealth is growing because expenses are growing. Anyway, expenses. So amazing income month. What about expenses? Let's move to the expense sheet. June. Total expenses 8,500. At least this is less than previous 2 months where we went above 9,000, but it's still a lot. I don't like it. But we've been on vacation, and the vacation that costed quite a bit. We also booked ticket to Rome because we are supposed to fly to Rome on next Friday. Not this week Friday, but next week's Friday. And so vacation, travel. In fact, if we take a look at the graphs here, and we pick May, February, March, April, January. Let's get rid of January and add June. If you put June in the bucket here, we can see that it disabled the sheet. Yeah. If you put June, we can see that travel, it's the orange here, drove expenses high. We are at the minimum in housing, minimum in health, almost just health insurances, groceries. What the hell? 180. Yeah, of course, we've been out for 2 weeks, and we have done a large grocery shopping on the last day of the previous month. In fact, in April it was like boom. Well, May actually, May here it was pretty high. Low transport, low dining out, because all dining out during travel is considered travel. So travel is pretty high. Baby is always high, and it hurts to pay a lot of childcare and not use it, because we brought our daughter with us, of course, to the sea in Apulia, but there were no school holidays, so we kept paying. That sucks. All other expenses has been like pretty low, some leisure, but 2,000 of travel sent us into the 8,500 here. What? Hey June. Oh, this is wrong. This is to be okay. That's deprecated, but that's still 9,259 here. So yeah, grocery were not 100, but 388. Yeah, I lied. Anyway, let's wait for the graph to settle. Yeah, yes, groceries not exactly 100, and not exactly 30 francs of dining out, but yeah, actually traveled 2,700. Thank you. Okay. Expenses. Cool. Then what happened? Let's go to historical net worth. Yes, we can see that things are going well. Well, there's already July here, but in June, which is the penultimate leg, we can see that the US dollar went down, the Swiss franc, the total net worth in Swiss franc went up. Yep. By currency, that's not much relevant. By asset class, we have seen that that's the pink is the total net worth. This is the bond, like the total bond, and it's going down. Of course, I'm selling them. That's total stocks, the dark blue here. Yo, bro. Yeah, that's stocks. That's going up. And it's cash and others. Others are like credits and taxes and whatever. They're considered I aggregate with cash. And there's something moving here, which is crypto, and there is also probably somewhere private equities. Yeah, here you can see private equities and cryptos. Okay, that's a nice graph of the fractions. So the overall the overall sides of this shape is the total wealth here, measured this time in euros, and here you can see the cash side, the bonds, the stocks, and here the other things. Yeah, in percentage wise, here you can also see that bonds are finally below 50%, and stocks are at more 37%. Okay, cool. Let's take a look at the kind of new sheets. Income. This is not new. We already know. Yeah, there's already July here. Expectations for July, but here June we can celebrate. That's the top month since how much is 2021, 2020 December. Let's see if it's more or less 2020 December, 22,690. Yes. So it's the best month since March 2020. Here, that was March. So probably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's not in the top 10 months, but it's above 20,000. We don't complain. when income is above 20,000. Okay, the income composition here, it's already selected, has been mostly salary, mostly taxes, dividends, second pillar, blog, streaming, yeah, several sources of income. Not bad, not bad. Expenses, here this is an aggregate, this is pretty new. I wrote an article on my blog explaining this tab, this sheet, that's pretty new. And it collects expenses from, it gets them from other sheets. Here you can see June, that's already July in, because when I create a new month, I already create the columns for the new month. Here, historical expenses, as you can see, this is June here. It's steadily growing. It's locally going down because we spent 9,000, more than 9,000 the previous 2 months. But I mean, that's still too much. But it's summer, we're traveling. I was expecting this in June. I was actually expecting to be a 9,000 month, but it's 8,500, not bad. What could we do to improve this while on vacation? Maybe we can sublet our flat. Actually, for more than we pay the rent, because the subletter can say, I lived where Mr. Rip lived for a while, for a couple of weeks. Probably we're going to do this next year. If everything goes well, we plan to do a couple of months vacation, a couple of months long vacation, and we will surely sublet our flat and cancel the childcare for our daughters. So essentially the vacation will pay itself with these 2 saved large expenses. Great. Income and expenses together. This is another new sheet that shows you income history, historical income, and the 12-month average. The light blue is the 12-month average income. Of course, there is July, so July maybe it's higher than this because I'm going to get some money for some reason from my activities or whatever. And there is also expenses, the red one, and the pink one is 12-month rolling average in expenses, which is sadly going up. Okay, we can still see the gap between income and expenses. By the way, forgot to check the final saving rate for the month, which has been 62%. Yeah, celebration. Total saving rate so far, 58.6%, but that includes July, which has low expenses and kind of high salary, and not final. So let's open it. Yes, if we cancel July, the net worth, okay, it's low. It's low because there is one sheet that we are going to visit soon that it's low itself. So far it's 57.5% saving rate. Total income 112,800 Swiss francs for the first 6 months. Spending has been 48,000, so savings 65,000, which is 57%, and increase in net worth has been 100. Well, if we remove this 10,000, 130 Swiss francs, which means we are doing better than just holding the money under the mattress, and that's great. Investing, exposing to currencies, with all the risk it carries, it's also making us richer. Actually, we would be above water, so our net worth would be greater than the beginning of the year, even if I had earned 0, and that's great. Okay, so here we have average income, average expenses, and here is expenses and passive income. So the dark blue and light blue are the same as the red here. Yeah, but I should pick better colors. The yellow The yellow is the passive income. By passive income, I mean, what if we just use the 4% rule? Actually, the pi% rule. Because I think, our desired safe withdrawal rate is pi. When the yellow line when will reach the blue line, let's say the 12-month average, we can call ourselves financially independent. As you can see, sadly, the level of passive income would cover our average expenses in 2016. They are moving. So the goalpost is moving. The target is moving. We are trying to catch a train that's running. We're running behind it. Apparently, the relative speed is not in our favor. This graph, I like it. I think it's much more interesting than just pure net worth. This is years of expenses accumulated. It is our total net worth divided by current expenses. So that's a measure of how many years of stored expenses we currently own. It means if we just get all our net worth and cash it out, how many years can we pay our expenses before going broke, assuming they don't grow by inflation? And that's a metric that's not moving much. It's actually pretty stagnating. We are at around, let's remove July because July expenses are low so far. It's still at 16, which is the same multiplier we had like in 2017, or it's below what we had in 2019 because our expenses are growing. Time to broke, my favorite tab, even though that's what's causing the type spreadsheet to be slow. This is a sheet that has 700 columns. I wrote an entire post about it. Go read it. I will just summarize it here. So the blue line here is current net worth, and that's growing. The light blue line here is what happened if we just stop earning any money, even from investments, and just wait until we die. That's the no income. What happened? Boom, we go to zero in April, in May 2036. So if I stopped doing everything, we will go to zero pretty soon, actually. What happened? As it's missing one line. It's missing the passive line. It's weird. Passive. Why it's not showing up? The red line. That's something weird. It's too close. It's too close to the no income. Okay. I need to check this. A15. Okay, I need to check this. Maybe I need to check this. Anyway, this line is too dangerously close to the blue one. No, I don't understand. There's something wrong with the internet. Someone is wrong on the internet. I will not try to fix it right now. I will not. Well, no. Oh, it's dangerously identical to. Okay, I can see the problem. passion. Oh, here is the problem. This is equal to 817. Okay, $8.17. Okay. Let's check. Yeah, here we go. Okay. Now that's much better. Okay. Yeah. Back on track. So the blue line is the no income projections. So this is kind of a retirement simulator, very brutal, that would require a lot of work to make it like a real retirement simulator. But in the end, what it means is that if we had no income at all, even from any passion job, like my creative endeavors, or like any income from investments, like all the money just cashed and put under the mattress, we will become broke in May 2036, which is great. When I published the article, so the previous month, the time to broke was like we would have been broke in September 2035. So we gained an extra 9 months of non-brokenness. The red line is what if we just pretend to be financially independent? So just leave off passive income, which is dividends, and like net worth growth by investing. So let's assume a growth of 3.14%, but an inflation of 2%. So it's pretty like very bad conservative expectations. Like not much growth, and that's before inflation. I should be more generous. I should assume 1% inflation or a larger growth. Let's assume 1% inflation. Now everything will move on the right side. Then, like while we wait for this graph to update, then will be moved. Ole, that's amazing. So if we assume just 1% inflation, which is acceptable in Switzerland, I assume, or maybe we can increase the return on investment before inflation. If we assume pi returns before inflation, I mean just pi return nominal returns, our net worth alone would go to zero somewhere in the end of 2042. 2042, it's 20 years from now. So we can pretend to be financially independent and we'll be broke, like investing the money, we will be broke in 20 years. Wow. Which should be exactly about when Pillar 1 pension kicks in. I didn't include Pillar 1 pensions, by the way. The orange curve is assuming passive and a bit of passion income. So what if I quit any job and just leave off my investment plus some passion job, like keep being a YouTuber, working like consulting and whatever. The assumption is 2,500 net income per month, which is more or less in line with current passion income. That's also growing like expenses with inflation. Is it optimistic? I don't think so. I think if I quit everything and focus on my activity 100%, I can sustain this, maybe even grow a bit. And what would happen if I quit and only leave off passion and passive income? So that's the prediction. We will not be financially independent. I've been working, and just earning this amount and spending that amount wouldn't cover the gap with investment returns, but we will be broke roughly when I'll turn 80. And that's assuming, there are pensions coming along the way. So that's reassuring. The green line is the same as the orange, but assuming one more year. So what if I work one more year, I keep earning like I'm doing right now, one more year, and then I only do passion job. Yeah, I'm fine until age, how much is this? Almost age 90. That's fun. And that's assuming it's a very conservative assumptions, like returns 314 and inflation 1%. That's lower than current. That's lower than FIRE metrics modeling. The red line is the Ravenna threat that I mentioned several times. It's the line that should tell us, hey, if we cross this line, we either reconsider getting like a new job or whatever, or moving back to Italy quickly. And that will be reached even if we do nothing, just live off dividend. In 5 years from now, the Ravenna bell would ring and say, hey, by the way, we are at that level. What should we do? The Ravenna threat is also growing by 1% or 2%, 1 or 2%. Let's check, 2%. Okay, maybe I should use 1% for Ravenna threat as well. Anyway, it's growing by, now it's taking B3, which is the inflation rate. It's not taking, it's inflation rate on this shit. It's not the inflation rate in this shit. Anyway, everything is good. It's a really great month. It's been a great month, not a great quarter. Recap. Great month, June. Not a great quarter overall, but a positive quarter overall. A lot of other things happen in my life during this quarter. A lot, including pregnancy, twin pregnancy, including like explosion of my creative activity. It's been a messy quarter, kind of confused. I'm really confused. It's a mess, as I said, it's a mess. Thank you for having reached the end of this very long video. Hope to update it soon. It's 1 hour 12 minutes long. Thank you very much. I'm sorry I couldn't make it for the live on the 30th of June, the usual live. So I will probably set this as a premiere on one of these evenings. Yes, have fun. I'll see you on the Friday Q&A in Italian language. Bye bye, Rip is out.